All right, good afternoon and welcome to the end of day review for today. And today is Wednesday, it's the midweek. Always the midweek is where we catch the huge move, either Wednesday or Thursday. That is our main focus from now on. We may take, one or two trades a week. We try to eliminate the over trading issue that we are facing. Okay, because when we are over trading, we will fall into the trap of FOMO, and also we over trading we force our trade then we to a very low quality or low probability setup. But if we only trade selectively, then we will have a better chance to pick a better setup. So that's the approach right there, that logic right there. But anyway, if we look at the calendar, this week we have a huge week CBI and the option expiration, Monday standard on Friday. But let's look the whole week, right? We can trade on the event of non-farm payroll, May 3rd, and then midweek we have CBI and the end of the month. It gives us mid-month. Right? For the beginning of the month we have a non-farm payroll. Middle of the month we have a CBI, and the end of the month we have a GDP data. So just treat that event. If we can trade focus on that, then we have a very good chance of success right there. We don't need to overtrade. Save our ammunition, our bullet right there, so we don't squander our opportunity, squander our capital. We did try that. We see that how it play out. We fell. We fell yesterday, and today we fell again. We take two trades today, but actually today we trade less, but it didn't turn out the way we want, so we take a loss, and we accept that. But we didn't overtrade, so that's that is what happened today. But the main thing we want to go forward from now on, we just focus on the couple of trade a month, that's this, because based on the economic event, and when economic event, that's where the move come from, and we just need to catch one of them, then we're good. We don't need to be right all the time. If we just need 50 win rate, we still win, because when we write, we have the win bigger than the loss. Let's say 1 to 2R or 1 to 3R. Yeah, that's an idea. It kills us. And by the way, we still in week 20 of the year, and the CBI release for today at 8:30. You can go. We can look into the chart later. And then at the end of the month, May 30, we have this week's last week of the year. We have GDP data, and then June 7, we have again the non-farm payroll, 7 general payroll, and then we have the Fed meeting on June 12 and 13 right there. 12 and 13, not 12, 11 and 12. We misspoke on that one. All right, before we go to detail, let's look at the CBI last time on April 10th. Well, we have a recording right here. So we're recording at 1 minute before. You see that? Wow. So a little different than today. But however, we do see the level right there. So basically it rate the high, or it rate a buy side liquidity. You see that? And then after it rate that, she boom, it went down. And we see key level on high time frame right there. And the setup right here, wow, is break this level and then it break it back. And then it break it level. So there's no reason for it to come back to this level. The only reason it come back is to what? To break it to the outside. We either put the sell stop at the level, or better, we could put the sell stop at the level also, because it's a huge move right there. Or this level for that matter. But we have two moves, right? The first move is the manipulation move, and then you have a real move, manipulation and an expansion right there. So that's the ICC, and you can see that, you know, of that. So basically after a giant move, the market go into the range right there. Yeah, the whole day goes to the range right there. You see, to the range after a giant move. But for today, it's different. Let's move this out of the way. For today, for this week in particular, the move is so much different. We see the giant move, the expansion right there after manipulation move, and this is the manipulation move. But for today, the manipulation move is very subtle. It's very hard to see because you don't see the huge rejection, you don't see the huge sell side liquidity sweep. But if we look carefully, we see it did. You see that? That's the sell side liquidity. If we look at that level, it break down and then it break back right away with a sell side liquidity sweep right there. Then we can put the buy stop right here at that level, or the high at that level, or the high time frame at that level. Either way, we have a very high risk reward ratio right here. With this, you know, last time, and with this knowledge for the lesson we learned for today, next time we will do better. Next time we will catch the move. We will catch the expansion for sure. That's our mission right there. We will relentless follow our mission. That's our commitment right there. But right here is what the cruising star we see. C-buy is long setup. All right, here's the setup we see for today. And if we look at the low time frame, you see that here's a huge move. Or right here is expansion. After expansion, you're gonna see a retracement, and then it gives you another expansion or reversal. So we see that it's a huge bullish right here, because after it break this level from yesterday, it never touched this level. If it break and it's retest from above, then there are a chance that it come back and break it. But you see, it never. That's a bullish signal, right? Yeah, so it's very bullish right there. It break the level equal high set on Friday. On Friday and then Monday, and then in the PM, Tuesday, yesterday it break that, and you see that it never touched that level. So it's very bullish signal right there. And now we see this setup right there. So it's the real breakout. In the real breakout, you want to see a first, we misspell right here. First huge, huge first leg up right here, expansion right there. And then you have test from below twice. Then you have a double sweep sell side query here. 1, 2 right there. It sweep this. 1, 2 right there. It's the last sweep before it make a second leg up or a second expansion move right there. Yep. Yeah, we should add to the note right here. We should add to the note so that's the bullish signal right there. Because if it tests from, it break and it tests from above, that means it can go and break it, but it does not. That's a very so level 52, 60, 75 equal high from Friday and Monday. Yeah. Broken on Tuesday and never retest from above, which means a bullish signal like that. Right, that's, and so we have expansion, retracement. How do you know the retracement end? The very first thing about retracement end is you have to have the, to make it more reliable, you have to have double sweep, liquidity right there. In this case, sell side liquidity. You see that every time, but sometimes the retracement does not need them, but in order to be a very very good signal, then better let it to be double sweep. I think let's refresh which one we should see it. Yeah, it's the version right here on 4-hour time frame, and when you go down time, we see right there expansion, and it goes to retracement. You say 1, 2, 3, 4, which is the last one, do a sweep right there. But this manipulation is very subtle. It's not huge like last time. Last time we see the manipulation is very huge, very big from last time. But if we look down in the low time frame on 15 minutes, you see the logic is still there. You see that it break out this one just above right there, and you know what happened? It reversed back the way. But the beauty right here, you see, the sweep liquidity either happen at this candle or this candle. Either way, that's the note that we have right there. Let's take some of the note we see. not this case. It's when a retracement end. Okay, right here. How do we know retracement end? Right, because it's the leg up, and you have retracement. Then how do we know it's end so we can go in? Right here is another idea right there. So we know the retracement end when there is a south side or bisector liquidity sweep, also called double push right there. Some people they call double push right there. So the long wick is the liquidity sweep, and it can be happen either at step 1, step 2, which is the break, or step 3, which is the reverse. So you have 3 steps right there. You have test from the above. In this case, the same right here. So it's expansion and retracements. How do we know? Because we know that right here we see the liquidity sweep right there, the sell side, and we do have a test from above. Says break it, and this is the test from below. Yes, this is the test from below, and then it reverses. Yeah, just the same signal there. So, but in this case, we see that the liquidity sweep happened at this step, at the break, and this guy don't need the liquidity sweep. As soon as this guy sweep, this guy don't need to do another liquidity sweep right there. The mission already accomplished, so it can break it. At first, we're a little bit today we're a little bit reluctant to go long right here because we don't know, but now we know. Well, now we pay attention. We know that either this guy sweep or this guy sweep. In this case, this guy is the one who sweep it. You see, this is very clean. The break is very clean, but this is break is not clean. You have a huge wick to do the job, which is liquidity rated or liquidity sweep right there. So either of them, right? Especially on this one, when this one do the sweep, it also do the tap in the level above. That means it tap it level. The only reason is for its comeback level to break it because it tapped twice. You see that? Test from above, it gives us, I think, test from below right here. Yeah, test from below. Oh, okay, right here, test from above, and then break it. Right here, test from above, and then break it, and reverse. Test from above, break it, and reverse. Yeah, this level. But at this level, it's also bullish. This it will look close suitable. It tests from below. It's gonna break that. So it's it's a 4 breakout right there. But the key thing we want to drive home is that we only go into a retracement when we see that the double sweep liquidity happen. Then we can go in. And the subtle difference is that the liquidity sweep can happen on step 2 or step 3. If we shoot the step 2 like this, go in right away, no question, no hesitation. But if we go in, we saw the break without wick, without sweep, then wait for the reverse. And if the reverse do a sweep, then we can go in right away. So this one happens to go early, but this way, this formation, we have to go in after the reverse. So that's the difference right there. But let's look at the chart to see where we see the retracement without the, liquidity sweep. All right, look at here. We see that, you see the wheel sweep, we already showed that. At the level, the same idea right there. It's the wheel sweep right there. Sweep right there. We double sweep once, two right there before go up. But right here, the same right here, the sweep right here. But right here, there's no liquidity sweep. That's the reason why we go short and we get burned right here. I think we did two trade, one right here, it flip on us, and another trade right here, it flip on us. And we are very aggressive. We do 10 contract in there and we wipe out. We hit our stop, daily stop limit. We're very eager right there. I think we take two trade. Okay, right here. Okay, right here. Yeah, two trade we take right here. At this level, and yeah, two trade flip right here. This level and this level. Yeah, let's do a edit right here real quick. Add a note into here. Basically, go short. So we go short at this, the 53, 12, 25, and right here, 52, 53, 21, 21, 50. And we got, we got stop out. It flip on. If we watch in real time, it flip. Because our idea is that, it tests from above, so there's no reason to go back this level. It tap. It already tap right here, or tap one, and it's gonna tap two, then it's gonna break it. That's our logic. But we see that logic a little bit risky because you haven't seen this level break before. If you had break before, then you have a reason to go short, but there's no reason to go short. So we mistake right there. The same right here, we see so beautiful in setup, right? You see the hammer candle, hanging man, for that matter, above this level, and it touched one from that two from above. We thought that the third time it gonna break, but it did not, and we paid the price. And this trade fell because it's not reliable because there's no break before that. So let's put a note right here. So next time we review, we know to short trade fell because there is no break or displacement. You look at displacement. No break to this two level. That's our mistake right there. Yep, that's the two trade we take. And let's look. This one is at what time? Around 12, and this one is about 13:55. All right, let's take a look at the recording so we have an idea that how it flipped. Let's look at the recording. All right, here's the recording at 12 right there. Right, we thought is our logic. Well, we thought that it break, but it pulled back in order to trap the people who want to go long, right? Yeah. So that is our logic right there. Well, that's right there. You see that we say, wow, it tests this. There's no reason for it to come back. The only reason to break it. That's where we go in and short them. We put a sell stop at that level, 53, 12, 25, and we got top up. We got it wrong. If we see a huge displacement to that level, then that gives us a reason to short. But there's no displacement, no break. Then the hanging man is not working. The idea of it can tap and to go back, to go another leg up. So we cannot make that assumption right here, right now, right there, if there's no break to the level before that. So that's the mistake we made. You see that? Yeah, it flipped on it right there. And we paid the price for that. Yes, you see it flipped on it. Actually, when it flipped, we go long. And you know what happened? We go long, then we get scared off. We get our break even on this candle. But if we stay in the trade, we feel like, oh, the market move up too much, it needs to be reversed. That's the BS right there. That's our personal bias right there. We don't know because who run the markets? We don't know. So why we put the idea that it cannot go up too much? To us, it's too much. If we're thinking in our head, it's too much right there. That's why we aim for source, but we should let it run. You see, as soon as we see the flip, we say, wow, it's a real breakout right there. But we get scared off. And we didn't trade in the long trade. Otherwise, we can get all our money back right there. You see, it continues to go up from there. And right here also, we saw, wow, test above one, test above twice. So the reason come back here is to short them. So we put a sell stop right there. But we see that our logic is also flawed right there. It tapping, it can tap to go up. It not only tap to go down. If tap to go down, before that we had a breakdown, a displacement, and that's the huge lesson we learned from today right there. Yeah, it flip on it right there. So if we stay with this trade around when you saw it flip, we did flip to go long, but then we down ourselves, we get out with a break even. Other way we can recover our loss. So we go in the level and we let it run on the high time frame right there. It run. How much we get? Wow, we get 15 points. Can you believe that? Yes, we make that errors. But anyway, we celebrate both our win and loss. That is the way we should practice. Yeah, I want to show something real quick right here. This guy is a good practice from this guy. He's one of the top trader in the world. He's in the book of A No Market Wizard in page 37 right there. So basically his idea is that he celebrate when he lose the trade, have a bad day. So that way it's all about sitting your mindsets, and we need to do the same practice, right? You want to get your mind back to calm, rational place rather than being negative and stress state. You want your decision to be driven by your personal cortex rather than your a little bit big worry here on my dialogues and whatever. If I realize that I have a tough time, I will ground myself and be grateful for the journey, and I come out and go out and trick myself. The ocean provides a good analogy. The ocean surface covered with wave and turbulence, but if you dive down, it's calm. We all have ability to dive down into the calm region. If you are worried about mixing a trade, you'll be prone to take the trade that you should not be taking. If your promotional irritates, you may snap your profit instead. Um, yes, that's so true. It takes time to practice. Yeah, let it run, or you might hold to your loss. You need to pull away from all those primitive reaction to a higher self, calm and center person. Yeah, and he says something right here very true. What a trader will sulk or feel horrible if they have a terrible trading day, like your huge loss because your computer went out. That's the trading it is. It go against the standard human emotion right there. So we have to turn ourselves in a different way. As a trader, you are continuing to go up against your own emotion limitation. That's why few people success in trading. But let not that scare us. We will make, yeah, we never stop. So that should not be in our dictionary. We never recognize failure because we believe the failure will make us closer to success. So we will relentless move keep moving forward. Yeah, so the whole idea that we have to take the loss easily and not dwelling on that right there. And you know that his nickname is the Unicorn Sniper, and that's a inspiration to us right there. We need to be a sniper. That means we need to wait and aim for the good shot and take the shot, not just spray everywhere. So that's the whole idea right there. Okay, that's it to close of the end of the review for today. We we appreciate your time and interest. We're always grateful for these opportunities. We do what we love, then success is coming so our way. Bye for now and have a great evening. Good luck and good trading. See you tomorrow.